Thanks very much for that, Em. Hao Hong is partner and chief economist at Grow Investment Group, joins us with his take on the markets. How lovely to have you on the show. Thank you very much for your time. You know, just to add to all the deflationary numbers that we've got out of China, all the deflationary prints, the one that Lynn highlighted, which was the Jan food CPI number, which came in at a minus 6% nearly year on year, really got me worried, because what people don't realize is this is a vicious circle. You know, with a negative PPI print, that impacts the overall employment situation, it impacts wage deflation, and thereby filters through in lower prices, lower demand for consumer goods, and thereby lower prices, lower CPI, and you know, then it kind of just feeds into this loop where the overall demand environment, which China has been thriving on, 50% of the economy is domestic demand driven, you know, goes into a spiral, and which is why we're saying that that's a key worry for the economy. How do you see that panning out, and what's an easy answer for it, if at all, at this stage, or there are no easy answers, and that's why people are so worried about China's economic future?
Yeah, thanks for having me. Obviously, there's no easy answer to these questions. Even though the market is not completely surprised by a deflationary number that is coming out, you know, because the deflationary pressure on the upstream has been lingering for well over a year now. So, you know, the upstream pressure is now being passed to downstream. Just now you mentioned that the food price deflation, which is close to minus 6%, is mostly driven by pork price. Right? So I think the pork cycle in China has become rather pronounced in this cycle, in the sense that in the past 2 years, you know, because of the pig flu, so you know, the pig farmers were trying very hard to sort of restock the piglets. So as a result, you know, 2 years later, you're seeing a substantial oversupply situation in the pork industry, and therefore substantial deflationary pressure on pork price. And pork is about, you know, 1/4 of the Chinese CPI basket, and so it is you know, having a huge influence on the CPI picture. So I think, but having said that, though, the Lunar New Year tend to be a strong season for pork demand, because people are, you know, having time off, getting together with the families, going to restaurants and all that. So it is still seeing close to minus 50% deflation in the pork price. So it's adding to, you know, the deflationary pressure. But then you're right, you know, overall picture is not particularly rosy, and there's so much work needs to be done to rejuvenate the economy.
Right. What happened yesterday with the change of guard at the CSRE, the China Securities Regulator, do you think would be a step in that direction? Because if the market stabilized, there is a sense that that would feed through in terms of investor confidence, and thereby feed through, you know, into what consumers are feeling and businesses are feeling.
Yeah, I think if you look at the mainland market reaction today, it seems to be rather positive. The Shenzhen Composite is up strongly, and also the Chinese as well. If you look at the change of guards in the Chinese regulator, the CSRC, you would notice that, you know, almost every time in recent years, when they change the regulators, it tends to be the market's lowest point, right? So in 2016, for example, and once again 2018. So it's not necessarily a bad news for the market. I think regarding of the change of the personnel is because, you know, they have been complaining about the quant funds in the market that is stirring the pot, and also a lot of illegal, irregular activities going on. For example, major stakeholders in companies were able to lend out their shares to bypass the selling restriction to offload the shares to common shareholders. Right? So it has been rather unfair for smaller investors. So I think, you know, the change of guards is trying to level the playing field.
Of course, but isn't the problem that, you know, we're focusing so much on the fact that, you know, it's the narrative is supposed to be that all of the malignment that we are seeing when it comes to the China equity markets is based on, you know, short selling. It's based on all of these, you know, malicious or nefarious kind of trading practices, when at the same time you have a massive liquidation event, because you have what's been happening with Zhongzi and the like. You have this fear that's present in the market. So do you think that the measures that they've implemented to now are going to be able to fix that, or do they need to go unlimited when it comes to their support of the equity markets? Because at some point, someone's got to replace that LO money that the foreigners had in there.
Yes. We have to do it one at a time, right? So, it's always need to start somewhere. It's better to be late than to be sorry. So I think, at this stage, this time the market plunge is very different from the past in the sense that there's a structural product in the market that has been dragging down the market prices, because it's an option that comes into money as the market fall, and brokers who structure these products, will have to close out their long position in the stock index, to hedge their own position. So I think as a result, as these snowball structural products comes in money, the market price just continue to be dragged down, unfortunately. So, there are many things that is happening. So because of the market price is down, and therefore it sort of arouse other problems in the market as well, for example, short selling. So I think, obviously it calls for a better improvement or, a better regulation in place, for the market going forward.
I wasn't necessarily just talking about these snowball derivatives that everyone wants to talk about. I'm talking about like a year-long liquidation event. It started off with the international investors, and then it started to get momentum, and you have all the property issues and everything, and it just began to cascade. So the question is, if we draw a straight line 5 years ago to now, we're basically where we were prior, and a lot of foreign money's come out. So you would have to do a basic correlation and suggest that the domestic money chased up that foreign money that came in, and everyone was doing well, and now we've seen it just ameliorate back to that 5-year level that we were 5 years ago. But with all of these measures, right, and unless the central authorities say we're going to go unlimited, what can you see, or what do you surmise is going to encourage major foreign investment to come back? Because that would be the juice that really sets the rally off. And I'm not talking like, the hot money, I'm talking long money. Is there enough that has been done, maybe with this securities regulator switch, in terms of the top man in the job, to soothe international investor tensions when it comes to investing in China, in your mind?
Yeah, I think obviously you're right. We peeled back much of the gains in the past 5 years, right? So it's as if we've done nothing the past 5 years. It's concerning. I think right now, obviously, there's a lot of work needs to be done. The new regulators who's coming into place has a reputation of being tough, on irregular activities and also on market regulations. So I think, there's obviously a lot of work for him to be done, and also, for foreign investors to come back. Obviously, after 3 long years of liquidation, it takes time to win back the confidence as well. I think, the marketplace has to be better regulated. I think the trust in the business circle has to be rebuilt. There has to be no sudden change of, rules and regulations. We can't just play the game as, change the rules as we play the game, et cetera, et cetera. There's just so much work that needs to be done.
Sure, yeah. No, that I completely agree. Policy consistency and policy continuity is very important. And one of our guests was pointing out how the gaming fiasco with the gaming regulation at the end of December may have been the final nail in the coffin. I just want to bring up this view that we got really from an economist at EIU, which is Economist Intelligence Unit, Shu Tianxin, who basically said that, with a change of guard, this is firstly not the first time that it's happened, that China has fired the CSRC chairman during a market rout, but they are looking at how some changes would come by with the change in leadership, leaving it to the professionals. Now, I want to understand from you that just this signaling, would that help in lifting sentiment? And when you're talking about leaving it to the professionals, what are they expecting?
Obviously, change of the guards is the first step, moving forward. Obviously, there's a lot of a regulation that is in place that has been unfair for, smaller investors. That has to be changed as well. I think, if you look at the 2016 episode, as the market meltdown, right? So there was an introduction of circuit breaker back then, And then, because it wasn't working out, the circuit breaker was canceled out, and then the CSRC chairman was replaced. And then the market sort of, bottomed out from there. And from 2016 to 2018, early 2018, we actually had a really good 3-year run, of a market gain of well over 25%. So I think, with history in mind, I think, there are a lot of hopes here. And also, we're standing at the end of the old year, and the year of the dragon is coming. So let's just look forward and hope the new chairman will do as the market is hoping him to do.
A little bit earlier on in this conversation, you said it's a step-by-step process, and everything does take time. Is there enough time, though, considering that, another one of the things that you're concerned about is what happens over there in the United States, and, there's this growing expectation that former President Trump could yet again be President Trump. Is there enough time to deal with everything internally in China to then not have another exogenic shock come in and just completely tip over the apple cart?
Yeah, there has to be a sense of urgency here right now. Obviously, wasted too much time, watching the market come down this way. I think right now, one thing that is working for the Chinese market is that it's exceedingly cheap, right? So the valuation of the market is at the lowest 10 percentile in the history. All right, so that is working for the Chinese market. But yeah, you're right. In the meantime, obviously we have to repair international relationship, toughen the market regulation, level the playing field for smaller investors, win back the confidence of foreign investors as well. So, obviously, between now and November, right? So there's barely 12 months left on the plate. So, let's hope that, soon after the New Year holiday, we'll get the work done and start, working towards a better year of the dragon.
Hao, absolutely stellar as always. Thank you so much for making the time. Really do appreciate it. That was Hao Hong of Grow Investment Group. You're very welcome. Coming up,